Hi guys, welcome back to another video. In today's video, I'm just going to talk about three topics that I think as an average trader you need to study and master if you are going to become a consistently profitable trader. It's my opinion. If I left out something, feel free to edit in the comment section below. What do you think other traders need to be studying in order to become consistently profitable traders? So yeah, let's go on with the video. So the first thing that I think every trader needs to master is actually understanding a higher time frame structure. Here I'm on the 4-hour time frame. You can even go to the daily time frame. I mean, if you go to the higher time frames, guys, you will see a lot more information about the pair that you are looking at and setups that you might need to be considering. Patterns. I know there are people who love to trade W patterns and all things like that. If you go to higher time frames, if you spot a pattern, what I learned is when you go on a higher time frame and spot a pattern, guys, that thing will be powerful. As an example, let's just talk about this. We had a structure here. I don't know if you can see it. This is a random. This is just a random. I just picked this. I did not even know that I would pick this. So allow me to do this. You can see since 2021, something like that. Since around 2022 actually, but since around end of 2021, beginning of 2022, Euro USD was in this massive bearish channel here, and this is on the weekly. And guess what happened when we broke out of that channel? We have since October, we have since been going up with what? Euro USD. We had a break there. Maybe it's going to test here or whatever, but we'll see. There's almost a channel that's forming here as well, something like that. I don't know how you trade, you place your channels, but this is just to give you an idea. Of what I'm talking about. But you notice where I wanted to mention was with a break of structure here on the weekly time frame. Now when you go down to the daily and 4-hourly or whatever time frame that you actually work on, things become much easier. So I recommend, guys, you study, understand, and master the higher time frame structure. Some people prefer the daily. You can use the daily time frame. Some people start on the monthly. Sometimes the monthly is too high for me to start analyzing on the monthly. I don't think it's usually necessary, but for some people, I know people who start on the monthly, then they go down to the weekly, they go down to the daily, 4-hourly, then they start looking for their opportunities there from the 4-hourly, 1 hour up to 15 minutes, but they have an understanding of what's happening on the monthly and weekly and daily. That's part of the reason I also have this indicator here. Is just to tell me the candles that are actually on the higher time frames. For example, if we go on the weekly, we are expecting to see a bearish candle. Let's just go there. There's a bearish candle there, and monthly should be a bearish candle again. Let's just go there. It's a bearish candle again. So even when I am on the 15-minute time frame, without flipping time frames too much, I can actually tell what's happening on the high time frame. That's why I have this thing there. but you don't have to use it. You don't have to use it. You just have to like just go through your chart and just see what's happening there on the higher time frame, especially the structure, what's happening. I just showed you with a massive channel that was going down there, and when it got broken somewhere around here, euro USD just shot up. So understand higher time frame structure is going to make your life very easy. Then we're going to go on to the second point. Maybe I'm slightly biased towards this one because it's what I use for trading. It's my trading strategy. It's how I trade. So maybe I'm kind of biased towards this, but I think you need to understand key levels. Key levels. Some people call them psychological levels, some people call them key levels, people call them different things. But basically, these psychological levels, we are talking about numbers where it's ending with 0, like there. And then we also have the middle numbers where it's usually by 5. So if you can see, let me just try to zoom in a bit. So this is 1.06 thousand, and the middle point will be 1.06 500. And for some reason, if I zoom out a bit, for some reason you just notice price respects these levels. For some reason it respects these levels, and on this channel I've done several videos showing you how I use this system of mine, and you can download it. The links are on those videos. You can find the links to download this system on those videos, and you can see, I don't know if you can say it's just coincidence. You can, yes, you can dismiss it as coincidence, but I found that these key levels and psychological levels, guys, they do work. Whether you believe in them or whether you don't believe in them, but they do work. The idea behind them is that, let's say you are a big bank and you have got $1 billion that you want to buy euro USD, or you want to buy euro, or you want to buy gold, or you want to buy another asset. Are you going to buy that thing at a random number, or are you going to wait for that asset to be straight 1700, then you buy, straight 1950, then you sell, straight 1850, maybe you wait for that to do another sell or a buy, stuff like that. If you have got a lot of money, are you going to be buying at a random number like 1835, 6.1 or 7 or something? No. The idea behind key levels and psychological levels is that the guys with the big money, they are waiting at these round numbers. They are basically waiting at these round numbers because it's very easy to say buy gold on 1750, buy gold on 1700, sell gold on 1950, sell gold on 1850. You get the idea. So you also need to pay attention to these key levels and these psychological levels. That will be a second thing for me, for anybody to master if you want to become consistently profitable. At least that's my opinion. Feel free to disagree with me, but it's right here on my chart. You can go and draw these levels on your chart as well, and you see how price tends to bounce off these levels. Then the third thing I would say is understanding volume. Some of these things do not make sense without an understanding of volume. So volume, I know it's like a gray area for some people, but you need to understand volume. Where is it going? Where is the push? Where is the push? So volume and momentum are kind of the same thing. So when you see bigger candles in one direction, for example, what we have here, we have massive candles going this way, massive candles going this way. Why would you start looking for sales in this scenario when you've got these massive candles going this way? With a massive candle this way, massive candle going down here, why would you look for buys in this scenario? Here, massive candles going up, massive candles going up. Why would you start selling in this scenario? So that's just an idea of volume. Understand where it's going, and especially on the higher time frames, you can actually see where it's probably going. That's why I said I started with higher time frame analysis. Higher time frame analysis. Understand what's happening on the higher time frame structure. Then as a bonus, I'll also say understand Confluence. Understand Confluence. Like I said, we were on Euro USD. Let's say you were in this scenario. There's a lot that you can actually add to be part of what your Confluence. For example, here with something that was happening there. I don't know if you are going to say this is all coincidence. So on top of key levels, we actually had a structure. I'm talking about this period here. We were not yet aware of this one. We had a period here where you saw the asset going round about this area here, tapped into that, and it went down, and basically we touched our trend line. So on top of the key levels, we had a trend line forming here, and it came back again. Then we started having a channel that was going on here. So we already knew that if it came around here again, there's a probability that it's going to drop. If it comes here because of this two touches that we already have here, these two touches, there's a possibility of it coming back here and shooting up again. And because we had one touch, two touch, there's a possibility of it going down here and actually going up. Then it eventually broke through this trend line here, so there's a chance that this thing is going to fly. You start building what your case for a buy or a sell. You are adding more confluences to that. Let's see if we go down to the lower time frames, what we can see further. So this is how you are building your case. So here we kind of have a W thing that happened there. You see we had one leg push up and a second leg and a push up. So you are saying on top of the key level, on top of the trend line, we actually also have a W pattern there that we usually say it's an idea, it's an indication of wanting to go up. You start putting all this case together like that. So confluences, find confluences before you take a trade. At least have three. Key levels will probably be 1, a trend line will probably be 2, a pattern will probably be 3. Maybe you also have another indicator that you use. I don't know whether you use stochastics, RSI, well, whatever you use. I no longer use all those things. But if you do, the point that I'm trying to make is try as much to have Confluence working in your favor. Whatever you use. So yeah, if you found some value in this video, please consider subscribing, like the video, leave your comments in the comment section below. If you are new, please don't forget to like and subscribe. For downloading free Forex robots, indicators, books and stuff like that, see the links in the description box below. About the broker that I use, see the link in the description box below. Then you can also sign up with them. I've been with them for more than 5 years now. They're a very good broker. Guys, I'll see you in the next one. Bye.